Let's welcome on board Hemang Jani, who is joining in. We've also got Aditya Agarwal on the technicals. Hemang, going to come to you first. And of course, we're monitoring what happens in the US, but I don't think it's going to have major implications on our own markets. But I think we're all heaving a sigh of relief with yesterday's rebound that we witnessed. What do you make of it? Do you think that that much overdue correction is still eluding us and has yet to come, or that this is sort of going to be the course of action for the markets, a couple of days on the downside, and then we bounce back?
Yeah, good morning. Thanks for having me. So I think we are going through this correction, which is almost now about 3 to 4 weeks, and of course, the earning season has been one of the main triggers, which has been a bit disappointing across sectors, and within sectors also we are seeing a lot of divergence. But I do think that once this US election as an event is out of the way, and once you see some clarity emerging, our markets should stabilize because a large part of the correction, which is earnings led, has already been priced in because at index level we have seen almost about 10% correction, at stock level anywhere from 10 to 25, 30%. So I think a large part of that pain is behind us. I think it's time to kind of start accumulating stocks, particularly the pockets where the numbers have been good, whether it's banks, whether it's defense, some of the pharma companies, telecom, so on and so forth.
Hemang, what about the Swiggy IPO? What is it that you're advising investors to do? Can it take on Zomato?
Yeah, I do think that the theme that Swiggy is offering, whether it's quick commerce or food delivery, I think that's showing a very robust growth, and there is enough investor appetite. The good part about Swiggy is that while on many operating parameters it is lagging Zomato, the valuation is looking quite attractive, both in terms of absolute market cap and in terms of EV to sales, etc. So I do think that in the current scenario, you will see a good amount of interest, and eventually, I think over a let's say 12-month plus kind of a time frame, the company can give 25-30% kind of an appreciation. Listing gains is not too clear at this stage because it depends upon how the market sentiment is. But surely, both from a theme perspective, valuation perspective, this is a compelling one.
The take coming in. In fact, Hemang, if I can get your view on Cummins as well. I mean, Aditya was talking about how the entire segment has done weak, at least in the last few weeks. Is it getting into the buy zone, or is it better to stay away from capital goods? What's your take?
Anisha, capital goods has been a bit divergent this time. L&T reported very strong numbers. At the same time, ABB, Siemens, I'm not too sure. And of course, Cummins numbers were not that great. So I do think that while there is a divergence, the broad trend is that the order inflow and certain pockets are showing a robust growth. So any meaningful correction, whether it's in names like L&T, Siemens, or Cummins, would provide a good buying opportunity because overall growth visibility is still very strong.
But Hemang, before we let you go, did you get a chance to look at PB Fintech's numbers? The con call is underway as we speak, but overall, if you look at the financials, it was a decent set. Not sure why the stock was down 7-8% yesterday.
So I think the numbers were largely in line. I think the earlier move by the management to move into the healthcare now, those concerns are also to some extent come down. And I do think that the platform companies, as a theme, still continues to look good because now the profitability wise they are very well placed. And I don't think there was anything majorly negative per se. I think this correction of almost about 7-10% provides a good entry point in a name like PB Fintech, where you will see a very decent 18 to 21% kind of a growth over the next 2 years.
All right, Hemang, I'm going to let you go on that note. Thank you for joining in and sharing with us your thoughts on the markets.
If you like this video, then like, share and subscribe to ET Now.